Hello, hello, hello. Happy Friday, everyone. How is everyone doing today? Good morning, Jacob. Good morning, Royal Palms. You are welcome for the IWM. Good morning, Sterling. Thank you for putting in the earnings. Is Intel from yesterday, though, guidance, beat, but geez, that stock is so insanely overvalued. I think it was down 10% at one point. Good morning. Happy Friday to you, Patrick. Stay warm. There's another one, Stafford. I hope you're staying warm. Also, hello, Stafford. What else? We thank you for putting in the Bank of Japan's news, Sterling. Good morning, Jake. Good morning, David Atkins. Good morning, Yogi. Good morning, Anissa. Good morning, Balaji. Good morning, Heinrich. Hope everyone is having a wonderful day so far and had a good week. Also, have a good weekend for the people that are going to get snow and cold this weekend. Wish you all the best and please stay safe. Sterling, what's your current forecast for the snow now? I know it shifted north because my sister's in New York City and they're expecting over a foot. So, all right, what do we got going on in the markets? In the markets today. Let's see. What do we have? We have the S&P Composite Manufacturing and Services coming out at 9:45 Eastern. Michigan consumer sentiment numbers. These are the final numbers for January coming out at 10 Eastern, and that is about it. So I'm paying so close attention to the possible 10 a.m. reversal time in when the numbers are coming out. So what do we have going on? There's your Intel. Oh, now down. There's 11.63%, which Sterling put in 11.62. Thank you. Their guidance was not good. And that stock insanely psychotically overvalued for their revenue and their EPS. But because the government owns like 10%, I guess you got to buy it. AMD up 3.15%. Oil coming back today, rebounding back above some key support. Hello, Charles. Let's see. Overall, we had GE also, still running. Energy and basic materials are running. Silver's closing in on 100. Gold's closing in on 5,000. Everything else, there you go. Fed watch, 97% for the pause next week. So that's pretty much the cake is baked, and 84% for March at this point. Fear and greed, upper end of neutral. Upper end of neutral. Schiller PE, 4063. I know you put in Slimmer SLB, Erickson. I know Sterling put those in the chat. Good morning, Holy. You're late. Did I say hello to Charles? Clorox is buying some company, FYI, pre-market all over. I've not looked at Clorox this morning. Thank you, Daniel. So what was interesting yesterday? What's this? I think the weather here is going to be a rain event again. Clickbait nonsense. You cannot always forecast catastrophic and end up with nothing to be operating with integrity. It's about the money. It's all about the money these days. So it was up above the 62.5. The 4-hour did close above the 62.5, but barely, but no follow through with the daily. And it could not fill the gap from last Friday. Very interesting to me. So, still, in order to shift the probabilities up on a daily basis, I will still look for some buying opportunities unless we really start trading below this. We still have a gap to the downside too from Wednesday to Thursday. If we start trading below that, the bullish, and it's not very bullish mode. I'm more in choppy, but with a slight bullish on still pullbacks. 69.10 to that gap fill, and it's a Friday, but going into the open 69.20, 69.21 area, we break below that. The next, besides that 69.10, 69.10, we still have 68.87 as the next key support level. So we'll still be looking for stuff unless we really start blowing through that 69.10 level. Other than that, again, choppy, choppy, choppy. So on the rally, I'm watching near yesterday's high, the 69.55, 57 area. On any bounce move, you get through there, nothing's changed from yesterday, 69.78 to 69.80. If we do get the rally on, still holding the 4-hour rotation zone and the key support. That's why if we start dropping below this, I'll be going to more neutral mode. So, I mean, we're still trading. We're still trading slightly below the highs from the end of October. The NASDAQ, we did fill the gap from last Friday. We still have a gap left behind to the closing price of 25,471. Excuse me. So I'll stay in slight bullish mode. Even if we fill the gap, but if we start dropping below it, not so much. Up here, this is just more of a horizontal channel. We don't have a clear rotation, and I'm watching the 4-hour rotation zone. So if we start dropping below 25,515, that's where we still have that little area right there. But if we go below 25,470, not real interested in anything with the bullish case in the short term. We closed above the 62.5 on the 4-hour, but did not follow through on the daily. You can see the daily just missed. 25,662.75, and we closed at 25,658.25. So I'm still going to be watching today to see if we close above there to shift the probabilities to higher price action on a daily time frame. Other than that, geez, this is trading well still below the October high. So everybody in this frenetic bullish mode for the broad market, it's really we've lost something here. Dow did shift the probabilities, but also ticked off to 75 and 87.5 and found resistance there. In the Dow, I'm really just paying attention to yesterday's low area, and right here, this 49,285 area. We start dropping below there, we could get back to the 49K area pretty quick. Not necessarily today, but even next week. I'm in just a neutral mode on the Dow. Russell continues to was climbing higher yesterday and pausing today. I'm paying attention to yesterday's low for key support. Yesterday's low area for the key support and the 4-hour rotation zone. So far, we're getting a channeling pullback. Can't really get bearish on the Russell just yet. VIX, slight bounce today, but again, back down yesterday, hit below 1550 at one point. Just sell vol. So unless I really start seeing a spike, it could just be an orderly pullback. So far, the DAX, not much did not trigger the percent B buy yesterday. So for me, just sitting on hands in the DAX, not seeing any great setups. If you do start trading above yesterday's high, though, we're into a clear path move. I'm still watching for a secondary reaction on the DAX, which 25,196 on a closing basis is key. Yields, I'll be looking more closely at these next week, but yields pulling back to the daily rotation zone and holding. So that's very interesting right here. Holding, we ran up, hit this first target, pulled back, and still holding. Now, if we do break below this key 4.23 area, I'll watch for a pretty quick possible back to 4.20. 30-year might be setting up for next week with a percent B buy. It's not there yet. Crude, setting a new sort of grinding higher. Here's what I'm keeping an eye on crude. And again, everything's scalpy. I was looking at 60.70 today. We're now above that. We had just got it back above that very, very recently. I'm watching now to see if that holds as support. That area holds as support because We're sort of making slightly higher lows coming in here with some upwards buying pressure. So I am keeping a very close eye on this. If we do hold that, we could retest the 200 and that key 62.5, which we did not close above before. So I'm keeping a close eye for a potential another quick break higher. Now, if we turn around and close below that trend line, this little trend line, I am not interested in any longs in the short term with crude until we find some more support. Natty gas, big long-legged doji yesterday and moving back up. Again, I would not sure. I'm going to see if this. Been watching the 4-hour rotation zone with this coming back down here and now rotating up. I'm going to be seeing in the short term. The trend is still up. Would not be shorting this. Going to be watching today if we close above 572 or if we make it to potential double top territory, because that will be a key line in the sand for any potential long or any longs to trail a stop then. There we go. Other than that, would not recommend standing in front of this with shorts just yet. There's no major reversal pattern. Gold, very overextended, but would not step in front of this. Would not just be trailing a stop on this, but getting insanely. Look at that bar. Look at that bar. How much? What was this weekly bar up close to 7.5%? So, but silver closing in on that $100 mark, the magnet price, and then we'll see what happens. We will see, but do not short metals. Copper, by the way, did not confirm the double top yesterday. Came down close, did not confirm it, and rotating back up with a break above yesterday's high, which could fall through for a percent B buy to retest this high area. Platinum to new highs. Platinum to new highs. After repeatedly holding the daily rotation zone. So that's platinum running too. Dollar index trying to find key support now. We closed below the 62.5 yesterday, so this remaining target that was just shy of hitting is missed. That is done. That is done. Well, the only thing now, the bigger massive double bottom is not invalidated yet, and there is another mini potential double bottom. So that's the only thing that puts me short term into bullish mode unless I get a percent B buy ahead of that. That is it. What else? Crude's going to spike when they turn Iran into what, glass? I figured that's what you meant. What else we have watched? Unholy Sinners movie last night. Interesting ideas, but best picture. I have not seen it. I cannot comment. Still stalling out at that 75% harmonic in the euro. This is a really sloppy potential double top also. On the 4-hour, still does work on the daily. So that's the only thing that takes me out of short-term bullish mode in the euro for a retest of the 200 area if that were to trigger. That's the only thing I'm watching there. Japan, yen, wide range on the Bank of Japan, but still stalling out at that 87.5. This is a little mini confirmed but not triggered double top. That's the only thing that would cause me to look for the slightly bigger pullback in the yen. We got the Spideys. The Spideys gap down today on a rally. 688.98 is the first target, and then the opening price above that, 689.85. Yesterday's low, 686.92. That low area is what I'm looking at support. We break below that. With momentum, then I look for the gap fill. If we just dink around that level, there's no shorts for me. 685.40 is the gap fill to Wednesday's close. Again, ticked off that 75% harmonic and stalled out. So yesterday was a downwards close above the 62.5, which I do not favor as much. I would prefer to see an upward close. The NASDAQ did not close above the 62.5. Gapping down today, so the gap fill would be to 620.76, and then to the open price of yesterday, 622.35. If we break below yesterday's low of 617.78, I'm looking for the gap fill only if we do it with some momentum to 616.28. Last movie you've seen is Spider-Man. You know what? I haven't seen a movie in the theaters since like 2014. I have not seen. I don't go to theaters anymore. I just wait for it to come out and I watch it on my big TV with my sound system at home. Much happier that way. Because you know what? If I need a bathroom break, I don't miss anything. So IWM closing right at spiking up, but closing at the harmonic. Remember, all these harmonics are tested on a closing basis, by the way. It doesn't mean you can't hit them with the high, but the key test was with the closing basis. If we do break below yesterday's low, I'm potentially watching for the gap fill, not necessarily today, but over the next couple of days, because it is overextended. And we have some waning momentum. So that gap fill would be to 267.79. And below that, then I'd be watching the rising daily rotation zone. Okay, pay attention on this with the 1 hour rotation zone. You're going to be in it with the gap down. So that bottom of that is right at the gap fill. So pay attention if you're trading the IWM with the 1 hour rotation zone. Watch is it on HBO? And I'll see. So is it worth watching, Holy? Is it worth watching? Let me know if it's worth me checking out or not. I've been really disappointed with a lot of movies lately. Not a lot that I've seen that's really captured me. XLF hanging around the 50 moving average. Did I miss any other stocks? Yeah, the XLF hanging to the other side. It's got, for me to get back into bullish mode now on the XLF, it's got to get back above. It's got to get back above the daily rotation zone. Yesterday did not trigger a percent beat buy, by the way. Oh, yeah. The levels were tested on a closing basis. Not on, like, I still will use them for, because they'll target stuff for highs or lows, but the back testing was done where the most likely areas to close were, not necessarily make a high or low. So that's why if it makes a high or low, I'll still raise stops at those areas because you don't know where it's going to close. But the harmonics were tested on a closing basis because the closing price is the most important price. Good old Bitcoin, not doing anything. The only thing is if it breaks above this 90,400, we'll look for a possible quick spike up, but this has got to do some heavy lifting. I'm now with this failed breakout more interested in potentially a roll down play. All the Bitcoiners are left for the metals. I'm telling you, I said that a while ago. The Bitcoiners left for the metals. Can we check out ASTS? ASTS. Sure. What do you want to check out here? Let's just see where our reverse harmonics takes us first off. And here's what I'm talking about. You see, this is a real good example of, you see, we got the spikes above, but look at these closes. All right. Look at the closes right there. Look at that gap down to the other harmonic, the minor harmonic, and then the gap up. So right there, that's what I'm talking about with the closes. Now, Let's see what we have here. ASTS. Let's see where our major harmonics are. Roughly there. Look at that. Look at that. And this is literally a stock I've never looked at. Yeah, so look at that harmonic cluster right there. This is why I use this stuff, because it gives me targets. I've never looked at this stock before in my life. So we got this key resistance. Now, where's my next target? If it breaks above here, so this would at least be a stop raise because it broke out, came back, tested the key breakout level. So again, the breakout level. All right. Here you have the high and the key reversal reversal close. So I'm looking at the gap open. Retested with resistance. Coming back, break above there, went up to the harmonic, pulled back, verified support. So I would stay in bullish mode unless this closes back below the daily rotations, short-term bullish mode. Because it's held this. If it loses this support level and the daily rotation zone, I'd then watch for a bigger pullback before establishing a long position because it is overextended. That does not mean it has to stop yet. What would be my next target? Again, this is the first time I looked at the stock. Just shy of 128. And then what would it be? Then I'd shift to forward harmonics. All right. See, because we have a pausing bar here. So now we got 120. I'd use this longer term harmonic as the first one, 128, but you got really 128 to 129.80 area as a harmonic cluster. So anything up that would be my next target higher. And then beyond that, we're looking at 138.85 area. This, I don't care if you trade, this is how we break down a market, or this is how I break down a market. And I watch the bottom harmonic on the retracements is at the bottom of the rotation zone. The top harmonic is at the prior high for the 25% retracement harmonic where it spiked just below, but could not close below it. So this is a very key area because unless you sell off quickly, this will keep rising. So my key area would be about 98.80 to 103 for support. Now let's see what I missed. So anchor harmonics from the candle close. No, anchor the harmonics still from the wick. When I say it's tested on a closing basis. Anchor the harmonics still from the wicks. The highs and lows were used to anchor the harmonics. The testing stuff was done on a closing basis, though, Eric. Where it's most likely to close, not where it's most likely to spike to. Does that make sense? Now, for gap fill harmonics, I do use the close for gaps. But for other stuff, I use the highs and lows for retracements and for projections and wait for a pausing bar. What does a pausing bar mean? It means a bar with the high where the next bar doesn't necessarily have to be red. A red bar is preferable, but the high cannot exceed the prior bar's high. So that's why this is a pausing bar. This could also be the pausing bar. It's going to virtually give you the same harmonic level. See? This is actually the better pausing bar right there as it closed red. But it's virtually the same level, so don't get stuck on a penny or two. You're welcome, Eric. Avgo support, but below. Yeah, let's look at Avgo, and then I'll get to. There's your little teaching moment to wrap up. Now, Avgo. Is it still potentially a week? Oh, it's still potentially a weekly double, but daily. This would now need. I'd have to break through on a daily and close above on the weekly. But Avgo, look at this. Really looks like it's going to break down. Really, this would be a too sloppy head and shoulder. I'm just wondering where those targets would take us. I'm just curious. That's roughly going to be the right area. Huh. Wow, that could take us pretty much back to the major breakout area in January of last year. Very interesting. I'm going to be paying attention to where this closes today if it breaks down. That's going to be very interesting. Trading at very key support. Was away for a few. Sterling, you can't be away from for a few. Could Apple be setting up a weekly head and shoulders with a flat neckline now? You don't. You can't step away. A weekly head and shoulders. Remember, Apple finished the daily head and shoulders. In case you missed that, the weekly it would be looking for a bounce. It's oversold against the 50 EMA and the 37.5 harmonic and the prior support. This is a real interesting area. Real interesting area right here. So yes, if it does bounce and we actually get a shoulder here, could be a little percent B buy. So I'd pay attention to last week's high for a scalpy percent B buy, but that could be running up to set up a shoulder play. Yes, it's a little early now. So you can't trade it as a head and shoulders yet. We need to get some confirmed support here and at least get some kind of bounce. Doesn't have to be a big one. Could be a small shoulder to make it symmetrical. But yes. Now this is premature also. This is for my own curiosity because I know where a flat neckline would be. Take his potentially at some point down to the 200 week and the 75% harmonic. Still early. That was for curiosity's sake. Again, what would I be looking for? Do we have a little mini potential double bottom here? Very interesting. Because we could easily bounce this back to a breakdown level into the daily rotation zone and set up for a short on another rollover play. Okay. So there you go. There's your Apple. There's your Apple. By the way, for all those Tesla fans, this does qualify as a double bottom. I should say a potential double bottom. You see it did not trade below 416.88. It right here. It also triggered a 4-hour percent B buy front run. Now, it has not confirmed or triggered the double yet. And that's for a scalp play only. For all those Tesla fanatics. It would need to follow through with a daily close above 454.30. And there is a gap left behind from December 26th. Now, the front run is done because it already hit key resistance. So it would be unwinding some and then re-adding it back on from my perspective if it closes above 454.30. You're welcome, Anissa. So that's the only, I'm keeping an eye on that little bullish bounce potential pattern because they're doing now we're putting the safety drivers in a car trailing the driver. I don't know how that's a safety driver, but it's got the pump yesterday. It did work for the Tesla's people. So there you go. All right, let's just peek in at the S&P. Just watch the 10 o'clock time frame. Watch 10 o'clock Eastern. 10 o'clock Eastern. I'm just looking right here. Just looking to see if there's anything. Not much has changed. Not much has changed. So watch this key support level. Technically, if it does, now this would be for a very choppy, aggressive trade, but if it does form a 4-hour percent B buy, it breaks above this 4-hour high, it would be for a very scalpy. This is something I would not be taking on momentum for a retest of 69.57. That's about the only thing I'd be looking at, and I don't even know if that's going to hold up. So right now, again, if it starts dropping below 69.21, not real interested without a stronger pattern. So, hope everyone stays warm this weekend in the cold zones. I mean, we're going to get cold here. We got a first alert weather day tomorrow. Going to get some rain. Going to be 66 degrees only as a high. So we're struggling out here. We're struggling. Glad you are only going to get rain, Sterling. Everybody, holy, you're going to get some snow there in Maryland. With that, hope everyone has a wonderful, wonderful weekend. Please stay safe in the cold and the snow if that's going to hit you. And I will see everyone next week. But for Fed Wednesday next week, Fed Wednesday, bye for now.